Hello, everyone. Something very important is happening in the world of precious metals, and most people don't even realize it yet. Recently, reports revealed that U.S. lawmakers have introduced a bill to create a strategic silver stockpile worth $2.5 billion. Not gold, not lithium, silver. At the same time, several sources say the White House is also considering the idea of building a national silver reserve as official policy. Take a moment to think about that. The same country that removed silver from its coins in the 1960s and treated silver as an outdated metal for decades is now thinking about storing silver like a critical national resource. This is not normal. This is not random. The big question is simple. Why now? Why silver? And what do they know that most people don't? Strategic reserves are never created when something is easy to find. Governments only build reserves when something becomes rare, dangerous to lose, or essential for survival. The United States has a strategic oil reserve because oil is vital for the economy and the military. It stores rare earth metals because without them, modern weapons, satellites, and advanced technology cannot be built. And now, silver is entering the same category. Silver is no longer just a shiny metal or a traditional investment, it has become a backbone of modern civilization. Look around you. Almost every solar panel in the world uses silver to conduct electricity. Electric vehicles use silver in batteries, motors, and charging systems. Data centers that power artificial intelligence, cloud computing, and the internet depend on silver. 5G networks, advanced weapons, medical devices, and semiconductor factories all rely on silver because it has the best electrical and thermal conductivity of any metal. There is no real substitute that works at the same scale and efficiency. If silver becomes scarce, entire industries could slow down or even stop. That is why governments are starting to worry. Now let's look at the supply and demand situation. For several years in a row, the world has been using more silver than it produces. Global demand has reached record levels, while mine production has struggled to keep up. Every year, hundreds of millions of ounces of silver are missing from the market. This gap is being filled by recycling and old stockpiles, but those stockpiles are shrinking fast. Major exchanges around the world have reported sharp declines in their silver inventories. Physical silver is disappearing into industrial products that will not return to the market for decades, if ever. You cannot easily recover silver from solar panels, electronics, or complex machines once they are built and used. Geopolitics makes the situation even more serious. China has already restricted exports of certain critical metals, sending shockwaves through Western industries and defense contractors. China is also one of the largest producers, refiners, and consumers of silver. Other major nations are quietly accumulating strategic resources. Emerging economies are discussing alternatives to the US dollar in global trade. Countries like India are importing record amounts of silver. Suddenly, the United States realizes that it may be dangerously dependent on external supply for a metal that is essential for technology, industry, and national defense. This is why the idea of a strategic silver reserve is such a big deal. At current prices, a $2.5 billion stockpile would require tens of millions of ounces of physical silver. That is a significant portion of annual global production. And this would not be a one-time event. Strategic reserves usually grow over time. If the U.S. government becomes a long-term buyer of silver, it will compete directly with industries, investors, and other nations for a limited supply. That changes everything. But here's something even more interesting. If the fundamentals are so strong, why hasn't silver already exploded in price? Why is silver still relatively cheap compared to gold and other assets? The answer lies in the difference between paper markets and physical reality. Every day, massive amounts of paper silver contracts are traded on exchanges. The volume of paper silver far exceeds the amount of real silver available. Many people who think they own silver actually hold only promises, not physical metal. When pressure builds, paper prices can remain artificially low while physical silver becomes scarce and expensive. We have seen this pattern before in other rare metals. In some cases, the official market price stayed low while real buyers paid double or triple to secure actual supply. The same risk exists in silver. If industrial users, governments, and investors all start demanding physical silver at the same time, the paper market could disconnect from reality. Those holding only paper contracts might receive cash instead of metal, while physical silver trades at much higher prices in parallel markets. Of course, nothing is guaranteed. The bill to create a silver reserve could be delayed, modified, or even rejected. Governments move slowly, and political debates can drag on for years. Even if the plan is approved, purchases will likely happen gradually to avoid shocking the market. In the short term, silver prices could move sideways while policymakers argue and industries adjust. It is possible that silver remains in a range for months or even longer. But the bigger picture is hard to ignore. The moment governments start talking about strategic reserves, it sends a powerful signal to the world. Industrial companies will try to secure supplies before prices rise. Defense contractors will rethink their procurement strategies. Technology companies will lock in long-term contracts. Other countries may respond by building their own reserves. This could turn into a global race for physical silver. Now add another layer to this story. The world is facing massive debt, rising interest costs, and growing uncertainty about currencies. The United States is running huge deficits, and global confidence in fiat money is slowly being questioned. When trust in paper money weakens, governments and institutions turn toward tangible assets. Gold, silver, oil, and critical resources become strategic tools, not just commodities. Silver is quietly being reclassified from a simple industrial metal to a critical national asset. For investors and observers, this creates an unusual situation. The downside risks exist, but the long-term upside potential is much larger if structural shortages continue and government demand grows. Whether this process takes months or years, the direction seems clear. When governments, industries, and nations all start competing for the same limited resource, prices eventually adjust to reality. Think about the psychology of the market. As soon as companies realize that governments might start buying silver, they will not wait. They will secure supply early. As soon as investors understand that physical silver is becoming strategic, they will want to own it. As soon as other nations see the United States building a reserve, they will not stay behind. Strategic competition does not allow rivals to control critical resources without response. This is how great powers behave when scarcity appears. Even if the silver reserve is delayed, the signal has already been sent. The world now knows that silver is not just another metal. It is infrastructure, it is technology, it is security. And once perception changes, behavior changes. Demand increases not only because of actual shortages, but because of fear of future shortages. That is how commodity cycles begin. At the same time, supply is not easy to increase. Opening new mines takes many years, massive investment, and political approval. Most silver is produced as a byproduct of other metals like copper and zinc, which means silver production cannot easily rise even if prices increase. This creates a dangerous imbalance between rising demand and slow supply growth. So where does this leave us? It leaves us at a turning point. Silver is no longer just a speculative asset or a secondary precious metal behind gold. It is becoming a strategic resource in a world that is rapidly electrifying, digitizing, and militarizing. Governments are waking up, industries are adjusting, nations are positioning themselves, and the market is slowly beginning to realize what is happening. None of this means that silver will rise in a straight line. Markets are volatile. Prices can fall, stagnate, or move unpredictably. Political decisions can change, economic conditions can shift. But one thing is difficult to deny. The structural forces behind silver demand are growing, not shrinking. The supply constraints are real, not imaginary. And the geopolitical stakes are rising, not fading. That is why this story matters. It is not about hype. It is not about short-term price predictions. It is about understanding how the world is changing. When governments start competing for physical resources, the endgame usually involves higher prices and tighter availability. History has shown this again and again. So do your own research. Question everything. Understand your risks. This is not financial advice, but analysis. Markets can be manipulated, delayed, and distorted, but they cannot escape basic math forever. When physical supply cannot meet rising demand, something has to change. Watch what governments do, not what they say. Stay logical, stay disciplined, and don't follow hype blindly, because sometimes the most important signals are not loud headlines. They are quiet policy decisions that reveal what the powerful already know, and right now silver is sending one of the loudest signals we have seen in decades. Thank you for watching. Take care.